Hello and welcome to another update video about ADA. Yeah, about the ADA chart. On the ADA chart, we see this triangle still. It might turn into something different. As you know, there are unfortunately many ways how we can really develop a wave count here and build a wave count from scratch. But what the wave counts are telling us is that we still cannot ignore the risk of potentially another bear market low. Now, I'm not the person to tell you it will happen. It was certainly quite likely until recently. And to be honest, the price hasn't done anything unusual yet and hasn't done anything we wouldn't have had on the chart anyway as a highly likely scenario, like the rally into the target area. And we're now in this target area between 30 and 34 cents. So there's technically, just based on the ADA chart itself, nothing that would tell us, all right, you know, we are in a bull run or something, because it literally is only working on its triangle. However, there are clear pivot points, clear pivotal areas that, if crossed, will make the idea of an Elliott wave triangle, A wave, B wave, C wave, D wave, E wave, less likely. So if we get a turnaround in this area and a breakdown from here, this is likely going to be our fifth wave, because the triangle is a fourth wave with one more low to come in a fifth wave, if we count it as a triangle. But it's not very clear if it really is a triangle. It, for me, is the scenario that has made most sense over recent weeks and actually months. I mean, we've been tracking this thing since July, or at least, since July. It has made most sense. However, we also have to say that triangles in crypto oftentimes morph into something different. I've mentioned that many, many times now in the Bitcoin videos as well. And also a running triangle in which the price makes a new price extreme is not so common in crypto. You normally get the contracting triangles. So these are just things to mention here that I don't like about the triangle idea, but still, due to the lack of other highly likely scenarios, or because there are so many, the probabilities are just fairly balanced, okay? So anyway, we've been waiting for the price to get into this region, and this is where we will probably get some further clues now. It sort of was a bit of a waiting game over the recent weeks, because the price hasn't done anything down there. You will remember that I highlighted that a break above the 27-cent level would likely send us into this region. That's where we have arrived now, and this is now where just the market has to make a decision. Yeah, it's not the TA that makes a decision. It's the market. The market is the boss. With the technical analysis, we can really only highlight the key pivotal areas. That's all they are. And when they break, then we are on a different roadmap. Then we're following a different route. So the yellow wave count is basically a bullish alternative. At least it's short-term bullish. The yellow wave count suggests that we have started down here in June, a wave 1. We have come down in a wave 2. We are basically now in a wave 3. We should get a wave 4 and a wave 5. This would be the first step to all-time highs. What ADA is doing at the moment is just far too weak. I mean, what I have to say is, due to the general phase change in the crypto market, the general sentiment change that we can see when we look at different charts, not only ADA, but mainly Bitcoin, right? It just highlights that another bear market low, in my opinion, has become less likely. Absolutely not impossible, and still is a very likely option from here, because we haven't got a solid structure of the lows. But we're tracking a short-term uptrend. And as long as this short-term uptrend is valid, it will guide us as to whether we need to follow the yellow count there or follow the white one, okay? So the yellow count suggests that we move up in a diagonal pattern. Now, this could be a leading diagonal, which would be bullish, and we count it as a wave 1. If afterwards we see a pullback in a corrective structure, it would be a wave 2. Could set up the price for a third wave rally, getting to all-time highs. Not in a straight line, it will be difficult and so on. But that would be the minimum I need to see. 5-wave move up and a 3-wave move down. Very important. I'm not suggesting you wait with buying until we have 5 waves up, 3 waves down. You can do. That depends on your own trading plan, psychology, and so on. Some people just like to have a little bit more confirmation. Some people are just buying where risk is low and reward is high. Okay, so that's just different. That's where trading differs from analysis, something that many people who come into the space as new traders or want to get into the space, have some difficulties, because they don't see the difference between trading and analysis, where analysis is all about patterns, structures. It's pretty clear. We know what we need to see to confirm a move and so on. Trading is about your personal situation, trading plan, where do you buy, where you sell. See, this is only analysis. There are hundreds of ways how you can trade this analysis. It's only a tool, okay? But you have to add trading skill, trading plan, strategy, and so on. So some people wait for 5 up, 3 down. You don't have to. The local trend is up. We've been highlighting that for a couple of weeks now. But the problem is with a structure, from a structural point of view again, if we zoom out again, yeah, this would be a 5-wave move, but we always say we need 5 waves up, 3 waves down to confirm that a lasting low has been made, because 5 up alone aren't ideal. That's not enough. It's the first level of confirmation. It's the absolute minimum we need to see. Only then we can watch for a 3-wave corrective pullback. Because what we also need to see is 3 waves down. The problem is that this move here could just be an A wave. This could be a B wave as it's highlighted. And then the move up in 5 waves is the C wave. And that generates a larger 3-wave structure, A, B, C, which means at this point, we could still fail and break down. That's why 5 up, 3 down is so important. Buying after 5 waves up is anyway not so useful from a reward to risk point of view. You want to usually wait for a pullback. But you can trade breakouts. Again, it's all depending on your strategy, right? I can only share the analysis. So now if we continue to push higher, the next key level to watch is the 38 cent level. That's basically structural resistance, and the break above that level will make the triangle idea less likely because it would force a recount of the triangle. Now let's go to the 1-hour chart. Yesterday's support area that I indicated to you, we were just here when I made the yesterday's video, and I indicated to you that this is basically a support area, support zone. These can typically be used to add positions if you like to. You can see the Fibonacci levels were perfectly respected. The price came down to the 50% Fib level and it generated a positive response. So the idea was we focus on higher against the 29 cent level, against this box. Its price is following that. We have 5 waves up off the low. It's not ideal how the proportions look like. So the micro count, as I said yesterday, is a little bit unclear, but we can use just Fibonacci support to guide the way further to the upside. In the white wave count, we're basically getting close to completing this C wave of wave 5. And I'm watching here for a reversal. Watching for a reversal doesn't mean it has started yet. I have zero evidence that a correction has started or a pullback, a move down. Okay, there's absolutely zero evidence for that at this stage. So I continue to push higher or to focus on higher, especially against yesterday's low. Okay, so as long as that level is holding, the uptrend is still in play. This could morph into an ABC structure in yellow. I have now added that to the chart. I mentioned it only yesterday. I added it because it gives us a clue about further levels to watch, Fibonacci extensions, projections, targets. You can see that the price has reached the 61.8 extension level, which is a key level to reach in a C wave. It's, however, a very early level. So it could technically be that the C wave is complete. Experience shows, however, that a C wave often goes beyond the 61.8 extension. So that means if we push again above yesterday's high, I would rather focus on the 1-to-1 ratio at 36 cents and then 38. Yeah, these are the levels to watch. I hope you liked the update about ADA. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.